Good morning, good morning, good morning. Welcome back, everyone. We are doing a new follow-up video on the index itself. We're gonna do ES1, which is S&P 500 mini. And I don't know if any of you guys remember, but about a couple, maybe 2, 3 months back, I was doing the funding challenge with you guys for Top Step and Apex, and this is what we were trading. So we already have the charts from when we were trading it, so I will turn them on later. And I'm actually doing this video for a friend who is actually doing the challenges right now. So today is FOMC, big news day. At 2 o'clock today, FOMC will announce interest rates cuts or not. And the whole world has been waiting to see what happens with this so that they know if monetary policy will be getting easing or if we will be staying steady and inflation will be allowed to run. So, with that information today, you will see the entire world basically have a move today, okay? Dixie will make a move, and it's already going to the upside, meaning, hey, we probably will see a reaction to crypto, which is usually inverse. So if Dixie's going up, we're looking for downside on these. And if Dixie and this goes up together, then we'll look for that correlation to show later. It doesn't have to happen today. Keep in mind today, everything is going to be volatility because it takes about 24 hours for everyone to digest this information. So don't go willy-nilly and front run yourself. Now, before we get all started and stuff, guys, I'm going to go through the usual rigmarole. If you guys haven't already, please subscribe to this channel. I would greatly appreciate it. That's literally all I ask of you. There's about 80% of you watching these videos that are not subscribed. Please do me a favor and hit the subscribe button, hit the bell button for notifications as new videos drop. You will get them. If you could, leave a like, a thumbs up, a comment in the comment section below letting me know how I'm doing. Let me know what other assets you would like to see, and I will get that in the next video. Aside from that, all our affiliate services that we use and recommend are in the description of this video below, alongside all the other social media that we have, such as Instagram, Snapchat, our Discord server where we do all our trading amongst each other, and our MEXC link, which is where we do all our altcoin trading, where we're going to do all our charting for alts as well, all our crypto. So yeah, aside from that, guys, if you haven't already, feel free to join and get some of that passive income going. So right back to this, you can see we're on a monthly chart. S&P has been going sideways and then upside, okay? And this is our famous little uh uh I mean, it's this, as in my opinion, when I see a formation like this, I see a head and shoulder, okay? I see a head and shoulder with a lower high, and what happened was a fake out, right? The head and shoulder did not give you a measured move into lower levels, such as 2800 and ES. What it did was it actually did a short squeeze and it actually took out the liquidity. Well, now all the liquidity above 4,800 is taken, and you are now coming to test your first average, which is around 53.57. Okay. Now today, if the news comes out, and honestly, like in my opinion, no, it doesn't matter if they cut or not. I still think we're going to see a little bit of downside in the market, and then within a day or two, we'll see the upside come. So just get that right there, right? Like just understand that right now. Even though the rate cut occurs, everyone will see it as a bullish and jump into the market, but the market might first create liquidity by going down, taking out all the front running, all the people who prematurely got into those positions, taking all their liquidity, then going and doing the breakout move. As we go down, people will short, people will panic sell. All that liquidity is grabbed. All the over leveraged longs got liquidated. All that liquidity is grabbed. And then we do the breakout to the upside. Because if interest rates are cut, we should naturally move up due to easing of monetary policy. If interest rates hold steady, we will go down in a much deeper correction because the market will force the Fed's hand to cut. That's how it works. Go look at history. The Fed does not care about the stock market, but it will cut if necessary if the stock market overreacts. The Federal Reserve is not a preventative measure, it's a reactive measure. Just be aware of that. They're always late, man. They're always late. There's always a move before they actually get to do what they're supposed to do. They have freaking never prevented anything. So, all right. Now, getting back to the chart, on the monthly, as long as this month we're above 53, 57, we should be looking for good upside continuation, sideways and up. If this is lost on a close, even on a daily close, the risk of us going to the deeper level is there, and that deeper level is right around here at 4,800. So from 53, 57, 4,800 is the next major level of support. Now I'm going to turn on my doodles, and it's going to be a little crowded, but I will start explaining everything with the doodles as we get moving forward. So here we go. Now, if you look left, we have always put in a top, and we've always come to the red fib, sometimes the purple, and then we see the reversal. We always put in the top, come to the red, purple, put in a reversal, okay? This time, did it to the opposite side. I put in the bottom, and I was looking for where we would find our resistance. This is when I was doing my FTX, not FTX, my Top Step and Apex when I was doing those trades. So now that we have all that established, why am I trying to show you this? I was, in those months, I was always looking at this as being the major top of US indexes, and that's literally what we have been doing. If you go to a weekly chart, let me show you this. Between the purple and red, okay? Same thing that I told you on the opposite side, between the purple and red is where I look for the resistance. So here it is, between purple and red, okay? I'm going to delete this for now. Between purple and red. And what this is showing you is that if we are going to short squeeze, the short squeeze should come to 63.44. We're not doing that. Right here, we're at 59.30. If we were going to go sideways here, we would continue up. We're not doing that. What this was a bear flag, in my opinion. Okay, that's bear flag has a 1-to-1 extension. Measured move, okay? You're basically hitting that measured move right now, which is right here. So what do we expect now? Okay, now this was the head and shoulder that was a fake out. Okay, this was the head and shoulder that the target was this. This was a fake out, right? This whole trade was a BS because what they did was they overextended, they overbought because Trump won, right? Trump became president, and that's when they put in the top in the beginning of Trump, like right under inauguration, basically, right? January. Where is this thing? Yeah, basically, right. Here's inauguration day, January 10th. And then right after January 10th, we put in top, and then since then it's just been going to the downside, right? What do we expect now? Now that this thing has put in a local top, where are we expecting for us to go? I'm going to delete some of these doodles. Yeah, we don't need that. We don't even need that head and shoulder anymore. So what the only possible path, okay? The only possible path at this point now is either we go back into resistance, like we come back here, and we try to go higher. But even if we get to this level, you are gonna find resistance. You're gonna find resistance to push back. You might consolidate here, and then you might pull back a little bit, and then maybe you get up, okay? Maybe you will consolidate here, is what I'm saying. After we get this upside, right? But probably since the market is doing what it's doing, you more than likely will come up and pull back. Consolidate, pull back. consolidate, take this liquidity, and then reverse up. Okay, why am I saying that? Now, yes, you took this liquidity right here, but if today the cut does not occur, this will get buttered straight down, and you will probably go to test this wick right here, because a lot of stop losses are right here, probably 51.24. Now I know these are big moves, guys, but it's that's the kind of day it is today. There's gonna be a big move. Excuse me. Now, if price action gets underneath 56.20 and open and closes underneath that on a daily, your probability of going to the downside is much higher. The next level of support after 56.25 is this 50 to 60 area. So if you miss this long scalp, be patient for this level to take long. Have a stop loss underneath this. So if I was attempting this long, I would have a stop loss right underneath this wick. I would enter here, and my first take profit would be here. Then I would extend TP2 to the fib, this next target, because this area is going to get tested as a dead cat bounce. That's the only way the shorts are going to be able to enter on a retest of this level, right? Take all this nonsense out of the way. The only way the institutions, how do I say this? Like, I want to take a $10 million short, right? How am I going to take a $10 million short? Am I going to enter here? No. I need to enter at resistance right around here, so I can manage my entry. How else am I going to take a short without knowing that, hey, where's the best place? Well, the best place is right in this order block, due to the fact that that's where they already took their short. Look, I'm getting annoyed now. That is the short order block, meaning those people who got that trade, they're not gonna just let it go. They're defending it. This is like institutions, this is banks, these are people with wealth and money that are able to create a sell-off like this because they accumulated, and then they're like, okay, I don't want to buy anymore, let's start distributing. Okay, everyone who wants to buy, we're just going to start selling all our supply to them. Okay, now no one wants to buy. Okay, oh look, we're getting a little bit closer underneath our fib. Okay, let's market, let's impulse all the way down and liquidate whoever didn't get out, so we can collect our money. Oh, okay, we hit our next our EMA. Okay, now let's stop selling. Let's just stand still. Let's not do anything. Let retail do whatever the hell they want. Oh, retail's buying it up. All right, cool. They're giving us they're reloading the open interest for us to dump on their head again. Because if we continually sell here, we're going to create a larger sell-off than we want, right? We don't want to sell our billion-dollar position at once, because then we are creating a slippage against us. We are selling the whole order book out because there's no one able to buy, and we are selling at worse and worse price as we're getting rid of our position. If we sell, say, 250 million, create this big dump, now people are like, oh, let's buy the dip, buy the dip. They're buying the dip. All right, here, now we can sell another 250 million. Okay, now we're not even getting back high anymore. Let's sell another 250. And the last 250, we can just capitulate it right under 56.23 and cause that last wick dump, so people panic sell, and then we can re-pick up all our position where we already have it pre-planned on a long. Okay, if this position is not matured and does not play, well, then we will attempt it near our two confluence factors, which is our fib as well as our EMA. Okay, and this EMA will track up. This EMA will track up every week. So here's our next trade. If this trade gets stopped out, we will wait for this trade to mature, and we'll take this long and then ride this long up. Now, if you actually got this long, okay, and you do properly trade this, it's a 28% gain from 45 to the level we're at. Now, in the same aspect, if you do not take this short and markets actually do come into correction mode, into the EMA that I'm looking at, that's a 20% drop that you're not ready for. And that's a true correction. Okay? Because we have not really, everyone's like, oh, we're in correction, we're in correction. Shut up. You don't know what a correction is. What is this? 4.5% down? That is not a correction, you fool. 10% is standard. 20% to 40% is a blow off top. Can you handle 40% drop? Basically coming right back into this previous rally. I mean, it's all already in the charts. It already done it before, right? Here's your top. You came back to the purple EMA. Here's your top. You came back to the purple to blue EMA. Here's your top. Why do you think you can't come back to the purple EMA? Why? Give me a logical, feasible reason why you think the market can't come back to this level. Because it's clearly, I can show you with common sense and a slap in your face, it's done it once, twice, 3 times, 4 times, 5 times, 6 times. How many times has it done it? 7 times, 8. Like, I can go on and on and on. Why I'm telling you you're not ready? This expansion of these EMAs, okay? The fact that we have not come to test this blue EMA in a very, very, very long time, yes, it's bullish. That's good. But it's also overbought. It's also showing you an unhealthy parabolic rise. And a parabolic rise have blow-off tops of 40 to 80% corrections. Is this the blow-off top? I don't know. Here was a blow-off top. What was the correction from this blow-off top? 25%. Here's a blow off top. This is, I think, COVID or whatever, right? That was the excuse they used. COVID was an excuse to have the market correct, in my opinion. Here's a 35% correction. Okay? Here's another one. 20%. We're at 4.5%, people. Everyone who's trying to say that this is the dump, it's not the dump. This is just the start. And I think I did not incorporate this wick. So say you incorporate this wick, here's 10%, right? So now we're officially, now they're just saying, oh, we're officially in correction territory. Well, I honestly, I think you got another 10 more percent to go. This is not, this is, in my opinion, is not the bottom. Even to the fib, it's only 1520. I think we're going to get a little bit more, unfortunately. And it's going to be on some news. So it's going to be some news related dump. It's not a technical like, panic or fear or profit taking. They have to create the FUD for the retail this panic sell alongside the institution. That's all there is. Because the institution, as they're selling their supply, I bet you they shorted as well. They probably used options to cover their position to the downside just in case if it goes up. And these guys also understand that until the Federal Reserve cuts, where's the money coming for the market to go up? Where is the easy money coming from? Right? So that's basically all I have for you guys today. We went over only one trade, which was a long. I'm only looking for a long. You can take a long here at 56.23 with like a stop loss of 1% below it if you want. If you want to wait for the next long I would say is at 52.97. What is that? 52.60. Sorry, 52.60. And then after that level, I'm looking at this. And now this is the main level that I will be entertaining. I am not going to try to do any of this nonsense over here. If I am going to take a proper trade, like how I am telling y'all, I'm going to do it this way. And you guys can do whatever you want to do, but this is going to be my setup for me moving forward. And I will set an alert, because I do think, oh crap. Okay, well I guess I can't set an alert. Stupid. I do think that that level is going to come, and that's when I'm going to start entertaining that trade. I don't think I need to front run anything until that is coming that way. So I know I said this, but I'm going to prepare for something like this. And if you look at this and you look at this, kind of looks very, very freaking similar. So just be aware that any fast moves into 59.30, the first tap is probably going to be a rejection. So don't get too like excited to just jump into that prematurely. And that's all I have for you guys today. If you guys like these videos, please leave a like below. If you haven't subscribed to the channel, please subscribe. Please leave a thumbs up. Leave a comment in the comment section below letting me know how I'm doing and what other asset you would like. Do you want to see gold? Do you want to see NQ? Do you want to see Dow? Do you want to see some other magical asset? Let me know and I will get back to you in the next video. If you are interested in trading with me live, please feel free to join the Discord server. Link to the server is in the description of this video below, alongside all the other affiliate services that we use and recommend that helps this channel grow, guys. Thank you so much. I hope to see you guys in the next one. Have a great day. Trade safe. Adios.